Hello, everyone. I'm sorry. Here is afternoon. Good morning, everyone. Thank you for attending this this webinar corresponding to the 5th unit. It's always a pleasure, as every week. Okay, let me start by. Oh, this is a very huge question. I would like to start by answering this question. Yes, for the first part, yes, I think that probably it's a translation issue because yeah, the correct concept is disposable income, right? So probably if it was translated as available, it's referring to the same. So sorry for that. Second, on Unit 3, page 9, beginning of the right column, says, for example, direct cash transfers, disposable income, make that. From what I understood, please correct me, it would be correct to say that the liquid effect. I'm so sorry. I look. My proposal is the following. If you can, I will have a look at this question at the end of the presentation, and I promise you to send you the answer by email or using the forum with the support of Olga. I don't have the file open at this moment, and for the benefit of this presentation, I think it's better to start. Okay. As you recall, I'm sorry, Cristiano. I'll make sure you have the right answer in a few. Okay. As you may recall from the last from our previous sessions, the idea is to cover the whole process involving a microsimulation exercise, right? So from preparing the ground to start the microsimulation to being aware of what the information it's available, what information will be required, what is the structure of the household survey, what to do with some specific issues we can encounter when managing the data sets. And now that I think that we can continue with the foregoing example of being a consultant in the country, right? So now you are in the country, you travel to that country, you are the specialist, and you are listening and talking to the government and the local team about the interest of the reform, what is the available information they grant to you, what is the local team, who is composing that team, and now you have all clear. You know you have the information required available. You have the support of a local team of specialists who knows how the fiscal system works, etc., etc. So now you're about to start the microsimulation, and for that, this is where the let me call this way. This is when the magic begins, right? This is not more than arithmetic issues, arithmetic work, but it is important. It is sometimes it's quite complex because you have, even though mechanically and technically it's simple, it's arithmetic, because you have to add and subtract some elements of the fiscal system. It is complex in the sense that you have to to be aware about the many components of this system, right? So if you recall the scheme in the second unit about the different concepts of income, you notice that there are a lot of instruments that we have to be able to isolate in order to simulate and capture their effect on poverty and inequality indicators in this case, for instance, right? So, starting from the market income, if you recall that scheme, you have to, for instance, to subtract the direct taxes, so you can identify, you can compute and quantify the effect on poverty or inequality that direct taxes are exerting, right? So the idea of this Unit 5 is to focus on a first big area of the fiscal policy, which is the taxation component. The next week, in the Unit 6, we will focus on the social spending issue. So for now, until now, you have been reviewing some concepts, some definitions, but the idea is to start figuring out how to define, how to compute each concept. By the way, let me start with a parenthesis and an announcement. Now, we are proposing to have an additional webinar session in which all the teachers, including me, Ivan, Alberto. The idea is to show you hands-on a short version, if you want to call it that way, a short version of a microsimulation exercise. So you have, so in that way, you not only have read the concepts in the documents and listen to different approaches in these presentations, additional information, but also you will be able to link all the previous knowledge from these presentations and from the documents into an exercise on Excel, in which we want to show you how to isolate, how to control, how to identify the different instruments of fiscal policy, so we can see all the process from the status quo until a proposed fiscal reform, so we can obtain the impacts, at least for inequality. So the idea is to take a household survey, not the complete, not the whole data set, because the processing time it's huge, but at least a subsample of that sample, so we are working in that exercise. So if you have some specific questions from this 5th unit and for the next one, and if you have ideas about interesting fiscal reforms in your own context, so let us know. There are already open some channels of communications, specific channels through the forum. So Olga, who is here, will be collecting all the questions, all the comments, so we can. So the teachers, we will make sure that we will address as much as issues as we can. when we describe, when we work on that exercise. So, okay, the idea is now to review the concepts that you already read and on the documents, but with some formalization. So let's think about, for the taxation side, let's think about, let's imagine this as a situation in which there are two specific agents, households and individuals, and on the other hand, companies. And how the taxes work. For instance, on the top, I think there are some tools here to write on the presentation. Let me check. Yes. Okay. Can you see that? I think you can, right? I am marking red with red a line. Okay, great. Okay, so if you as an individual, you're a member of this household. So for functioning, for the well functioning of your life on a daily basis, you require the consumption of goods and services, right? Some basic goods, other not that basic. We people consume a lot of goods. So when purchasing those goods and services, we purchase those goods and services from companies, and in that process, we have to pay some taxes, right? This part in the top, it's about indirect taxes. So those taxes that are levied on consumption, which are, for instance, the value added, the sale tax, etc., etc. And on the lower, on the bottom side of this scheme, companies, if you want to see that way, companies buy labor from household. And for selling that resource, which is labor, individuals have to pay taxes as well. Those are the direct taxes. Of course, companies in this process have also to pay taxes. If you can see here at the very bottom of this slide, I introduce a third agent, which is the government, and the government is the agent who is in charge of regulating these transactions and designing and applying the mechanisms to collect those taxes in order to be financed, so the government can redistribute companies and households some benefits in the form of social spending for households, and in the form of subsidies and some economic incentives for production to companies, right? Okay, in this process, let's focus on the top of the presentation. In this process, the indirect taxes are of many types. There are some taxes that are levied on, for instance, just the quantity consumed. But there are others. Taxes that have to consider not only the quantity consumed, but also the price, but also the components of the goods consumed. Let's imagine, for instance, soft drink, right? So the soft drink taxed with I don't know, 15% of the VAT, but also it can be taxed with an additional X amount of taxes because of the content of sugar. So from the perspective of government, probably it is better to disincentivize the consumption of that of soft drinks, because the government could say, I prefer that that consumption is lower for that good, instead of providing additional resources to the health system and take care of people who is suffering from diabetes or other related issues, right? This scheme is mainly designed to show you, the idea is to be aware about the many possibilities that we have to take care of when constructing a microsimulation model. So there are some goods that, for instance, you buy a TV, right, which is taxed with the 10% of the VAT. So you have the price. In this part, you go to the supermarket to buy that TV, and you see the price, and that price is composed by a tax, this T. So depending on the quantity, the X of TVs that you buy, that will be we can obtain a different amount of taxes which will be charged by the government. So there are some taxes that the identification of the tax it's direct, right? So prices and quantities, simple as that. But as I said at the beginning, there are another goods that you have to control for the content of the goods, the quantities, all at the same time. So as we mentioned in previous sessions, you have to be with the support of the local team. You have, and before starting the microsimulation, you have to. It's ideal to have, for instance, a scheme like this, in which for the country you are working on, you have all the taxes, direct, both direct and indirect, that are working at that moment in the country. Who pays for those taxes? What are the rates? What are the different mechanisms of taxation, etc., etc.? For instance, I don't know, the VAT tax, which is the most common tax across countries. You can have different rates depending on the product, and even in some cases even on the location of the geographical location of households. Whether you live in the capital or you live in the countryside, probably you can have different taxes, different rates for the same tax. You can have another goods or services that are exempted in some regions, but not in another. So it is ideal to have all the information very clear when starting the microsimulation, and to understand how this process works. What taxes are paid in terms of quantities, in terms of contents, in terms of simply the price, or in terms of geographical location, where you buy or sell a specific product or service. And for the bottom part, you pay for the labor, for your resource that you exploit in the labor market. You have to pay taxes in the form of which are called direct taxes, right? So that could take the form of that may include, in addition, some contributions to the public system, which is basically Social Security, the pension system, etc., etc. We will be disentangling those elements later, but this is the basic framework, right? Households not only pay for the goods and services they acquire, or the resources they sell, they also pay for the assets they own. So this is why this is to understand and to take into account. There are some countries, and within countries there are some regions in which the car's ownership or the ownership of the dwelling are also taxed. And those taxes are not always collected by the federal government, but sometimes by the subnational government, which is the case of municipalities or states or specific administrative regions, right? So I am describing this scheme because in this the microsimulation can become very complex in the terms I am describing. There are several interconnected mechanisms of the collection of taxes that you have to control for. Different taxes, different rates, and different mechanisms. So the starting point is to understand how the basic framework works, households and companies, what is the role of the government, and what are, and from the perspective of the government, what are the rules and what are the legal mechanisms and the guidelines to collect those taxes. And of course, from the perspective of the companies, of course, you as a government, you will collect some taxes, some indirect taxes from the products they produce and sell. And of course, you can collect direct taxes from the capital gains or the income they receive for the selling of the product. It is important here to notice that microsimulation models, at least the kind of microsimulation models we have been describing, and fiscal incidence analysis are based on household surveys, which consists of a restricted sample of households, which is representative of the socioeconomic characteristics of the country. And sometimes some samples are also representative of the reality of some sub-regions or states within that country. By being a sample, and this is a very common problem of household surveys, by being a sample, they might face problem with the tails, especially at the top of the distribution. They could be excluding some very, very rich households. And of course, because they are household surveys and they are not focused on businesses and corporations, they will exclude the capital gains and assets from corporations, etc., etc. So these microsimulation models, the scope of these models is the dynamics of households, and in that sense, the fiscal system that we will be modeling is restricted to the indirect and direct taxation on households. How much households pay for the services and goods they consume and sell, and we will see in the next unit how much and who receive benefits from the state in the form of the redistribution of those taxes that were collected in the first place. Okay, so this is just for the taxation side. For the social expenditure side, there is another, that's another very complex part of the microsimulation. And all of this can be modeled on the survey. That's it. When you have your household survey available from the government in the country you are working, you can see that you have a vector of incomes reported by individuals and households. And your interest and your goals will be to decompose or to construct the different concepts of income that you review in the second unit. It depends on the information about how that income in your country was collected. For instance, in I don't know, in Costa Rica, I think, household report, at the moment they are interviewing the survey, they report for salaries, they report the gross salary. So you know that ex ante, so you can deconstruct that income. So instead of having the original vector of gross income, now you can have, knowing how the direct tax work, what are the income brackets, what are the rates, etc., and the different contributions the individuals have to pay. Now you can have a second vector with the net wage, and a third vector with the amount of direct taxes paid, and a fourth vector with the amount of social contributions paid, etc., etc., etc. This is what the microsimulation consists of, in decomposing or composing, deconstructing the different income concepts depending on what is your starting point. So in the scheme, the private transfers, which include concept which is called the net market income. And then if you add public transfers, you can have the disposable income, and then if you subtract the indirect taxes and subsidies, you will have the consumable income. And then if you monetize the social services, you can have the final income. So in this process, depending on where are you from and how the information is collected in the survey, you can start with the disposable income, or you can start with the net market income, or with the consumable income. So you have to work backwards or forward in constructing and deconstructing. So the idea is to have the different vectors of incomes and the fiscal instrument, so that at the end you can change the criteria affecting those vectors, and then measure again poverty and inequality indicators, and you can isolate the pure effect of each instrument. So, for instance, let's formalize the model of the VAT. Imagine that you are working, every one of you with the household survey of your country. So you open in Excel or in Stata your data set, that you can see that you have a variable called consumption in this case, because it is indirect taxes and it is the VAT, so those are taxes that you paid when you consume. So you have the vector of amounts of resources that you spend during the last month. Sorry. So let's say that the first row, that is the first household, reports a consumption of 50 pounds, right? And that amount of 50 pounds corresponds to the consumption of, let's say, coffee, because I am having a coffee now, so it's the first good I came up with. Okay, so these households spent last month 50 pounds in coffee. So your goal is to disentangle or to isolate the amount of taxes paid in coffee, paid by consuming coffee. So if 50 pounds is the G, which stands for gasto in Spanish, which is spending in English. So that amount of 50 pounds could be the result of the tax rate. Tax rates are always percentages. So if you divide that by 100, you can have a proportion ranging between 0 and 1, right? So 1 plus that proportion it's the tax. So if it is 10% the tax, so the tax by which you multiply some price, some specific price, it's 1.1, right? So this 50 pounds spent in coffee could be composed by a specific tax and by the price and by the quantity consumed. So you can, your goal will be to construct a column with the net amount of spending in coffee, that is without the tax. A second column with the amount of the tax paid, and probably another with the quantity consumed. Okay? So this is just a simple identity to formalize one simple amount that you will find in the survey. This is the typical amount. So what you need to do is this. So if I want to obtain how much this household paid in taxes for consuming coffee, notice that this tax here is multiplying. So this is a simple identity. Given that it is multiplying, I can move it to this way to be dividing. So 50 divided by 1.1, which is the 10%, how much is that? Let me do it here. 50 divided by 1.1, it's 45. So let me call it this way. The net amount of spending in coffee for this household is 45. So I can write 45 here. So I know that this household pay 5 pounds in taxes. But how about the quantities? You know, before starting the microsimulation, you know the rates of the tax, and you know the market price at the moment of the collection of the survey, right? Or yeah, I mean, you have to know this information. What is the market price of the good consumed? So if these 50 pounds originally reported by the households are actually because this household consumed 2 units of coffee, So at the end, what you will have, it's just, I mean, with these amounts here, you can express it per unit. If this is not a unitary, if this is not this one, if this is not a unitary expenditure, based on the information on the quantities, you can express the net amount spent and the tax per unit here, right? So this is the basic idea. This is, for instance, let's assume that the quantity is 1. I mean, that kilogram of coffee, which are with 10%, with that information, this household spent 50 pounds. So the net amount spent in coffee per unit per kilogram was 45. This is the status quo. About if the household, let's assume that now with this information, imagine a bundle, a basket with different goods and services. So you repeat the process for each good and service included in the basket, right? So that based on the total spending of the household, you measure poverty at that specific moment in that specific country, which is the standard situation actually, right? So you measure poverty and you obtain that poverty at that time t is equal to 20%. So 20% of the population is under the poverty line because their consumption is below the value of the consumption basket, right? Okay, so now the government requires more resources because they are interested in financing the next Summer Olympic Games, right? So they want to increase the 10% tax to 12% tax. So when you identify this, the spending per unit without the tax, once you isolated the tax in the status quo, and now you introduce the potential reform, which is an increase of 2 percentage points in the tax rate from 10 to 12%, you will have here, how much will be the next, sorry, I am, so now with the tax, the new amount of taxes will be 5.1. So based on this new column of consumption, you measure again poverty or inequality, and you can see, for instance, let's say that poverty increased from 20% to 21%, right? So this is just the effect of a fiscal reform increasing the VAT tax in 2 percentage points. So this is why it is important to isolate and to identify and construct and deconstruct the different components of each fiscal tool. Because once you have the tax decomposed, you can simply modify it accordingly to the interest of the government or the goals of the potential fiscal reform. So the idea is every time you construct or deconstruct the income concepts into the very different fiscal instruments, the idea is to be aware and to be measuring what is the effect on poverty and inequality from that sorry, I got distracted because this call I was receiving. You can measure, it is ideal to measure poverty and inequality in order to capture the magnitude of the effect exerted by changing each fiscal instrument, in this case, indirect taxes. So how to construct this new column? Simply just multiply the new tax rate, the proposed tax rate, by the quantity consumed by household and the price, right? Price per quantities by times the new tax rate. So you can have this column, which is the standard, the status quo, and the new one after the reform. So you can identify the effects of this reform. That is the standard idea. You have to do the same for the income tax model. Oh, sorry. And just as mentioned before, this is done. Let me repeat it because it is important, and this will give you an order of the magnitude of these exercises. This has to be done good or service that you included in your standard consumption basket. And just recall that each good or service can be taxed with different mechanisms and with different rates depending on the type of the product, the content of the product, and where in the country, within the country, if that is the case, where are the rates different. For instance, in Mexico, until recently, the VAT tax rates that we paid for consumption of the same good in Mexico City was different for the tax rate that for the consumption of the very same product in the border, in a city, in the border, in the northern border, or in the south as well, I think. So the taxes in the borders were different. So you have to control for that. So of course, each household in the household survey will have associated a geographical location where they live. Okay, so this vector, the vectors of taxes and consumption and incomes that you will be deconstructing won't be standard. They will vary in terms according to the consumption patterns of each household and where they live and how much or who are supposed to pay for that, because remember, in some contexts, in some countries, some taxes are exempted for some individuals, particularly in poverty, etc., etc. So this is just to start with an order of magnitude which is huge in terms of dealing with the microsimulation. So even though it is just about adding and subtracting amounts, it is like an art to translate the whole system into the survey. And as you can recall from two sessions ago, I think, not all the information that you require to implement the microsimulation is reported on the survey. We will see in the next session for the social spending side that for instance, particularly in social expenditure. If you want to model, if you want to do the same that we are doing now with conditional cash transfers, for instance, you can identify who are supposed to be the recipients of these benefits, because you can identify if they are in poverty. So the rules of the program say that people in poverty, it's by default the recipients of these transfers. But how about if you don't know I mean, you don't observe the amount reported by these individuals, how much they report to receive from that specific conditional cash transfer. They reported to receive a given amount of transfers corresponding to a big concept of transfer, but not the specific amount of that specific program. So you have to consult what are the rules, what are the mechanisms, and then to impute or simulate information within the household. So we already review the many alternatives to model, simulate, or to impute the different concepts that we require to implement the microsimulation. But the idea is that big. I mean, it's basically that you will be able to translate, to replicate the whole system in the country within the household survey. All of this at the household level. And at the household level, you have to be able to obtain results that are practically the same that those reported in the national accounts and in the administrative records. If you are not even close of those amounts, that could be due to some errors in the construction of the model, some errors in the construction of the concepts, etc., or in the worst and extreme scenario that the household survey is simply wrongly collected. I mean, there are sample issues that you cannot control, so there is nothing more to do. The sample is simply wrong. That is not the case across Latin America and the Caribbean. The region has a good experience in collecting survey. So if you model the whole system within the household survey, at the end, the amount after the microsimulation, once you translate the whole system into the household survey, so you deconstructed all the income concepts, you identified all the amounts of taxes paid, for instance, those amounts of taxes paid, trust me, are super close to the amounts of taxes paid reported by the tax authority. So that is why a household survey it's a good instrument, because it's representative of the population. So depending on how precise you can identify the different concepts and you can model the different instruments, you will have results that are representative with a statistical confidence of the reality of the country. So the results you can obtain will be very useful, will reflect the reality of the effects of a potential reform. So that is only for the indirect tax. For the direct tax, it's practically the same. I mean, it's the same logic. You will open your household survey with the vector of incomes collected, incomes reported in the household survey, and you will see, for instance, as I mentioned it before, in the case of Costa Rica, they report this one, the gross income, which in Spanish we wrote it like imputable income, which the translation will be the taxable income. But bye-bye, Doreen. We'll see you. We can hear you next week. Okay. This is, for instance, in Costa Rica, how people report the income they earn. So this is the gross. So again, if you know what are the rates and what are the amounts and what are the concepts of social contribution, of taxes that individuals have to pay, you can decompose this into different vectors, right? One is the income that is net of taxes, another one corresponding to the amount of taxes that this individual pay, and the amount of social security contributions to the pensions fund, for instance, right? So it's the same rationale. There are other cases in which the complexity here is in this part. Sorry, and this certainly differ from country to country. This column, the amount of direct tax paid, it's quite complex to model because it depends on how much individuals earn. I mean, what are the income brackets? Because depending on how much do you earn, you will be taxed with a different rate, or alternatively, you could have a fixed amount of tax to be paid given the amount of income you earn, right? In some cases, for instance, this identity it's applicable for the Mexican case, I think. In some cases, like the Mexican one, if you earn less than certain level of income, you can be benefited from a subsidy, an employment subsidy, right? Or a compensation. So you have to be able to model that, if that is the case, right? So the amount of tax, of direct tax, it's depending on all these factors. Whether there are some specific taxes, where in the distribution of distribution of the brackets, the income brackets are individuals located, whether these individuals are exempted according to their income, etc., etc. So I am not detailing more because you can have these slides to be reviewed in more detail, these identities. But the idea, this is what I was talking about. Depending, it is not the same an individual who is earning nothing. For instance, it's an individual who reports to be employed and who reports to be working, but to report zero income because it was working in a family business. So it is not the same. This individual who is earning from zero up to a maximum of 6,000 pesos, which is around $300 at the market exchange rate now. it is not the same this than this individual, which is a super high salary for this individual. So they can have different rates, as you can see in the last column, or fixed quotas of direct tax to be paid, right? So you have to be able to identify where in these brackets are individuals located, what are the fixed quotas, if there are any in your context, or what are the rates that apply to them, so you can deconstruct the different income, the different concepts and the different fiscal instruments accordingly. There are another complexity, which is the Social Security, which are part of this initial question, as I mentioned it before. And a median individual in Costa Rica, in the Costa Rican survey, reports the gross income. So it is my task to isolate the net income, to isolate the amount of the indirect tax, of the direct tax paid for that income, which involves this whole process of identifying the tax break, the rates, etc., whether there are some exemptions, some fixed quotas, etc., etc. But there is also the component of Social Security contributions. And that, depending on the country, could be a big issue as well. For instance, in Brazil, direct taxes or taxes to income, for instance, are, I mean, it's super complex to disentangle that and to understand the system in the first place, because in addition to the different income brackets, there are different quotas, there are different rates that are paid at the federal level, but there are also components at the subnational level and at the municipal level. This is only for the direct tax. And of course, the same logic applies to the Social Security contributions, whether they are contributing to the health system, to the pension system. If that contribution corresponds to the system, which is the same who covers pensions and health as in the case of Mexico, that is less complex. But if there are separate institutions, separate amounts, separate rates, that adds a lot of complexity. So at least for the case of Mexico, which is quite complex, but comparatively simpler than other cases. For instance, to disentangle the amount of Social Security, you have to identify the range of income. I mean, this range, the brackets we mentioned it before. First, to identify in what bracket or in what range are individuals located. Second, at what institution are they affiliated? For salaried workers in Mexico, there is an important distinction. If they are working in the private sector, so they contribute to the IMSS, which is the Mexican Institute of Social Security. If they are salaried, but working in the public sector, they are affiliated to this system, which is the same, the Mexican Institute for Public Officers. But this is not, there are not only two systems in Mexico, there are also the systems of entities of government which are decentralized. For instance, the oil company has its own contributory system. The universities, the state universities in Mexico, which are at least one per state, so you have 32 different pension systems. In addition, because Mexico it's a federal country, in addition to this public system for the federal government, you also have 32 different public systems at the state level. So it adds a lot of complexity, right? So depend, for instance, and it is very important to disentangle and to identify the exact amounts of contribution or taxes individual pay, depending on where they are, who they are, how much they earn, etc., because let's imagine this potential reform. Let's say that the government is interested in changing the rules of how social contributions work for salaried public workers of the state oil company, because some specific purposes of savings, etc., etc., etc. So you have to take into account that all of this in order to provide results, the required results for the proposed reform. So I don't want to go into further detail within these equations, because, as I said, you can study them with more time, etc. They are simple identities. But the idea is to understand the complexity and the rationale of the microsimulation exercise, in order to provide, again, useful and relevant results for your counterpart, the counterpart who is interested in implementing a specific reform. So this is only for the taxation part. We have to deal with the second part, which is the social spending, or the redistribution of taxes through transfers and public services, etc., which involves a high degree of complexity as well. But what more you have to take into account? Salaries. When talking about direct taxes, it is not only about opening the survey, look for the vector of incomes reported by individuals. Oh, I am seeing that this individual is earning $500 per month. That's fine, or per annum. And I know that the tax rate for indirect tax for this individual who is in this income bracket should be 30%, and for that income bracket, he has to pay certain amount for Social Security contribution because he's a private, a salaried worker working in the private sector, etc., etc., etc. Okay. You are assuming that that amount of income reported is a standard salary, but it could be the case that that amount should be decomposed, or it is not composed only by the potential taxes this individual has to pay that you have to identify. But this $500 reported as an income, probably it is composed by a standard salary, but also an amount paid corresponding to the extra work done in terms of hours. For instance, in Mexico and in many other countries, if a standard worker in some industries extend his or her labor for 2 or 3 more hours, they could receive an additional income. One advantage of expressing these incomes in annual terms is that you have to capture You have to be able to model the benefits, for instance, for Christmas. So the benefits at the end of the fiscal year, workers tend to receive some bonus, different bonuses, different incentives for vacations, for etc., etc., etc. So all of these concepts have to be included, have to be identified and disentangled as well, and you have to make sure that each of these income concepts within the whole concept, which is the salary, for instance, whether these extras are also subject to specific taxes or to different rates, right? So this is again the formalization of the model. I am not stopping here because you can review that. Because my interest is more in that we all become aware of the rationale and the complexity of translating the fiscal system into a survey in order to simulate changes and to report social effects. Not only social. We have mentioned it before that governments are primarily interested in collecting more money. So we can evaluate impacts in terms of the collection of incomes using taxes, which is an effect on the public finance, and also the social cost by changing the tax rates that are paid by individuals and households, right? So they talk about how about the taxes that corporations and the super rich families have to pay. Okay, that's an important part. And in order to model for that, there are other instruments, so we can combine the household survey with administrative records of the tax records of the payments made by the big corporations, if we are lucky enough to have access to that information, right? So just a handful of countries have provided access to those data. So yes, you can match the household survey with that information, so you can have a whole distribution of incomes and consumptions in order to model the whole system. But I would not worry about it, because the huge part of the fiscal system is that corresponding to the household, to the income and consumption dynamics within households. So especially for the indirect taxes and for social spending, you don't need more. You only need households. So for that, household surveys are enough, and you can model at least the share of direct taxes that corresponds to personal income, not corporations. We don't care about it, at least at this point. So the purpose, and I am finishing with this. The purpose is to bear in mind this complexity, so you can come with some specific concerns and questions to be made in the forum, so we can collect them and we can address them in the final session, in which we will be showing step by step how the microsimulation works in Excel, and in doing that, we will be, of course, reviewing all of these identities, adding and subtracting different components of the fiscal system. So you will see at the end, you will see the impact, at least on inequality. If we have the time, we can review the effect on poverty. But the effects are just simple measurements. Here, the main goal, the aim of these sessions is to be clear what we have to do, which is decompose all these concepts, which is isolate the different fiscal instruments so we can perform a microsimulation of a potential reform that any specific government is intended to do, so we can say ex ante, before the reform takes place, we will be able to say, look, government, that's fine, go ahead. No, that's not fine, it's better to do this or that change. Or you know what, no, this is a bad idea, you will have a tremendous social cost. So it is better not to move that. Why not to change this income instead, or to make that this specific population pays more or less instead of that another portion. There are different possibilities. So I will end this presentation here. If you have any questions, I have one question from 1 hour ago, but this is from a different unit. If you have some questions now, please use the chat. If you prefer to wait and to review this presentation with more time and then think about a potential reform in your country, and to send specific comments and questions in the forum in order to be addressed in the final extra session, so that's fine. So as you wish. I am finishing here, and thank you very much. I don't know if another teacher wants to add something. For instance, Ivan, or you want to say something? I don't know.
No, thank you, Eduardo. I think it was a very complete presentation by your side, and so I don't have anything else to add. Thank you.
Great. Thank you, Ivan. So, if you have questions, colleagues, I'm happy to address some. If not, we will be happy to receive them later. Apparently no. Okay, Charles is writing. It's typing. No. Okay. Thank you very much. It is always a pleasure. You will have access to this presentation. No. I think you already have access to this presentation, and you will have access to the recording of this session. So let's take some time, study these identities which are not included in the document. So bear in mind this complexity, not the mathematical or statistical complexity, but the complexity in translating or in replicating the system, and we can address it in the final session. Thank you very much. Have a wonderful week.
Have a nice week.
And bye. Cristiano Prado, let me copy and paste your questions, so I will send you a message, a detailed answer. Thank you very much.